Welcome back. Good to see everybody. Hey, Zachary, Jaina, Black Widow, Jason. Great to see you guys. Let's jump right in. Here's what we got. Of course, you guys probably already know from our stream yesterday that Janet Yellen has officially resigned from the United States Treasury Secretary. Financial chaos incoming is probably an understatement. Let me fix this camera for you guys real quick. There we go. What's going on? DJ, Chris, Jose. Home sales. New home sales expectations for this month were expected to be down by 1.8%. Now keep in mind, I'm talking about new home sales, the number of sales. This is not the prices of homes. But they were down much more than 1.8% today. The numbers came out this morning, and U.S. new home sales fell this month by 17.3%. 17.3%. This number is astronomical. The beginning of the housing market correction is not only begun, but is well underway. You're still seeing price increases in certain cities, in microclimates around the country, but many of them where new construction was really strong over the last 10 years are already in correction. If you look, for example, in the Dallas area, in Idaho, in Florida, and many other southern and western states around the country, you'll see massive decreases in price cuts on homes. These are the numbers that just came out today, November 26th, with new homes for sale by stage of construction, completed homes. They were expecting it to be down by 1.8%. The reality is that they were down month over month by 17.3%. The new houses for sale by stage of construction for completed homes has incredibly just collapsed in ways that we have not seen in a long time. We have not seen so few sales, and the total number of completed new homes that remain unsold is currently at the highest level seen since September of 2009. So the available number of new homes that have not been sold has never been this high since 2009. We're talking 15 years. 15 years, ladies and gentlemen. That is an astronomical amount. You can see here the increase in the last 12 months in new homes that have not sold is increasing exponentially quicker than it did back from 2004 to 2006. It was kind of a slow climb from 04 all the way through 06 as it climbed from the yellow line to the purple line and then kind of became exponentially higher from 2006 through 2007, the end of 07. We've not only seen that not be the case, but we saw a massive jump in the number, in the rise of home sales, of lacking new home sales and available new homes that have been fully completed, increased from 2022 through 2024 with a minor downtick there. And that has completely changed and continued to increase exponentially higher. This is not good for most people that own homes, but this is very good for people that are looking for a correction in the housing market. There is some serious slack in housing here. And the fact that this many new homes remain unsold and is at the highest level seen since September of 2009, while new home starts are decreasing. New home starts are the number of new homes that are beginning the construction process, is indicative of the fact that people just are not buying these houses, and with good reason, because this is the most overvalued housing market in history. So if you look here, you can see consumer confidence report from the Conference Board shows that the percentage of respondents who think stocks will be higher in the year ahead is the highest it has ever been, dating back to when this was first polled in 1987. Americans are extremely bearish on the housing market, as you can see by the number of new homes available. The lowest number of new home mortgages and even existing home mortgage applications in many years. Yet people are still incredibly bullish on the stock market. We have reached a level of euphoria in stocks and crypto that has not been seen since the dot-com bubble, that has not been seen since the GFC. And as a matter of fact, it has actually never occurred before. You can't always be a contrarian in times like this. But we have to look at the facts. And that is that most people, more people than ever, believe that the stock market will end at a higher number than it currently is, with a higher valuation. Stocks and crypto and housing are in the biggest bubble that we've seen in our entire lives. Now, I'm not here to tell you that it's all going to crash tomorrow. I'm here to tell you that they're extremely overvalued. And the old saying, "Don't fight the Fed," also continues here today. These are the unrealized gains to the upside and losses to the downside on investment securities by banks. Right now, that number stands over $515 billion in unrealized losses on investment securities. The majority of them are held to maturity securities. This means that banks are stuck with them. So unrealized losses on securities reflect the difference between the market value and the book value of these non-equity securities as of the quarter end. And it's likely that we've got a ticking time bomb on our hands here. Now, again, I'm not going to tell you that Bitcoin is crashing. But what happened? We saw Bitcoin lick 99,500, and of course, Jim Cramer had to come out and say that he's bullish on Bitcoin. And of course, immediately when that occurred, well, it went from 99,500 down to 91,000. I'm also not here to tell you that MicroStrategy is going to collapse. But I will say that it is an overvalued Ponzi. Now, MicroStrategy is up 2,253% over the last 5 years. And in the last, let's go this way. In the last year to date, it's up 416%. Right? In the last 5 days, unfortunately, though, just about in the last week or so, it's down about 36%, but still remains up 38% over the last month. Incredibly high valuation for MicroStrategy right now. Currently up 613% in the last year, up another 3% in after hours right now. The thing is, Dario brings up a good point, that MicroStrategy can be seen as a Ponzi scheme, which by definition, unknown to their victims, such as large institutional investors that are being provided with all these disclosures to make informed decisions, make it appear as such, because they face significant refinancing risk, especially outside of the crypto euphoria. It's effectively, MicroStrategy is an investment bank for Bitcoin. And their strategy involves issuing securities that are backed by Bitcoin, which create significant value through the spread between the prices of Bitcoin and the fiat dollar. So Bitcoin purchases here with MicroStrategies are thought of as revenue, and the rock bottom costs of capital are best thought of as costs of revenue. So their market cap could potentially reach the trillions of dollars, driven by the unparalleled role in the Bitcoin ecosystem and what seems to be an impregnable moat of owning 1.3% of all the Bitcoin in existence. Here's Michael Saylor here, actively encouraging traders to short MicroStrategy. Now, if you shorted it in the last 5 days, at the top, here around 535 or so, you did very well. But I don't necessarily think that this is a good stock to short going forward, and I'm going to explain exactly why after this 2-minute video explanation by Michael Saylor, and I'll show you guys exactly why on the charts.
Inspiration now is, if you really hate Bitcoin, I want you to love us. Like, we're the perfect instrument to short, right? Because I promise you I won't sell it, right? We're going to be levered long Bitcoin, and if you don't like it, or if you just want to hedge it, you get to sell our stock or sell puts or buy puts, right? And the worst thing I could do is to take your side of the trade or to interfere with what you're doing. So I think part of MicroStrategy's rise to prominence in the space is we have been laser-like focused. We're very consistent. We're very transparent. We're going to buy Bitcoin, never sell Bitcoin. We're going to borrow money intelligently. If you like Manhattan, and if a company said, I'm going to borrow $5 billion at 1% interest, and I'm going to develop real estate in Manhattan, you might think that that's the kind of company you would like to invest in. But if you hate Manhattan, and we're 150% exposed to Manhattan, you get this investment thesis, like, that's the company I want to short. And the most important point in the marketplace is you just have to be very pure, true to your focus, have integrity and consistency and transparency, because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is, we're going to do what you can't do. We're going to buy Bitcoin, hold Bitcoin, and we're going to issue equity, and we're going to issue debt instruments, and you can't do that. We're a public company, and on the NASDAQ stock exchange in America with a nearly 30-year track record, and we have 16 billion of permanent capital. That's Bitcoin, right? So I can create an equity with 80 or 90 vol. I can have permanent capital. We can stand massive swings because of our capital structure. That's what we can do. What you can do is decide if you want to buy it, sell it, hedge it,
or short it.
So MicroStrategy fell 35%
I can create an equity
from the peak that we saw November 21st, right? Hi, Lisa. Good to see you. That's a $30 billion worth of market cap that has been erased in 4 trading days. Bitcoin fell 9%. Of course, MSTR being levered saw one of its largest 4-day drops in history, dropping $30 billion. There it is, 37% in 4 trading days. But again, I'm going to show you on the charts why I think this is actually going to reverse and trend upward again. So it's a levered Bitcoin play, and this is a whole new level of volatility for Bitcoin. Bitcoin's down 9%, MicroStrategy's down 37% due to that same leverage, and retail loaded up right here at the very tippy top prior to that decline. Retail investors on Wednesday, that day, bought $42 million worth of MicroStrategy stock. And this was the largest daily retail buy on record, which was 8 times higher than the daily average seen in October. 800% more than the daily average seen in October was purchased on last Wednesday. And this week, last week, retail investors bought nearly $100 million worth of MSTR. Over the last 2 months, MSTR outperformed Bitcoin by almost exactly 300%. Bitcoin was up 62%. MSTR is up 181% as expected because it's leveraged. But over the last few days, this correlation has broadened, and MSTR is now trading with significantly more volatility than Bitcoin, according to the Kobesai letter, and I think they're absolutely correct. So MicroStrategy updated everybody yesterday, and they now hold 386,700 Bitcoin. That makes their Bitcoin position worth $35.5 billion. They have a market cap currently of $73 billion, MSTR, and they're trading at around 2.1 times valuation of their Bitcoin holdings. But that premium has narrowed. So we saw that nearly hit $100,000, drop below 95K as it was extremely overbought, Bitcoin that is, and MSTR, of course, followed. So the euphoria that we've seen here exceeds levels of almost anything we've seen in a long time. And last week we saw $136 billion worth of trading volume of MSTR stock. And not even Amazon, who has a market cap that's 29 times bigger than MicroStrategy, has seen a week with that much volume. So that goes to prove that the drop was greatly overdue there. So what happens after this? Let's take a look here at this chart. Here you can see in large red bar of the volume on a selling pressure. What's going on, Typo? Good to see you. The large red bar is usually followed by a multitude of days of downward price action and then a turnaround here, as we've seen multiple occasions happen. We've seen it happen here, in which we have basically a hatchet. I like to call it kind of like a hatchet on this upward trajectory. Another increase, and then a hatchet back downwards, an increase, another hatchet back downwards, another increase, a hatchet back downwards. And the blue lines here are large increases in selling volume or shorting volume. And we've seen a very similar thing here occur just this week, with a bearish engulfing flag, if you will, start to form. Let me scoot that over for you just a tiny bit so you can see it a little better. There you go. So that's the MicroStrategy stock. And what happens every time it has this pattern? It seems to get larger and larger and larger and more pronounced. And it appears as if most of the correction is in. I'm going to be looking at a couple more days here for MicroStrategy to decrease in price or level out. And then if it increases significantly, at that point, I'll believe it to be the opportunity to go long. But we've seen some absolutely incredible volume on MicroStrategies. And the cycle that they use is simple. And that's why it appears to be really a Ponzi. They borrow money with these 0% convertible notes. They buy Bitcoin and drive the price higher. They sell more shares of MicroStrategy at a premium and buy more Bitcoin. And then they repeat. So if you think they can do this cycle repeatedly, then the stock is likely to continue to rise. And that's what we're seeing here with these cycles that they're pulling off. And we've seen them now that they increased their convertible note offering due to strong demand even greater. They currently have $3 billion more in convertible note increases. And as much as I believe this is likely to be a Ponzi, if you will, and will eventually see a massive correction, right now, I'm looking for this stock to level off before it starts to take off again. And I do believe that will be the case. But again, this is not financial advice. Do your own due diligence. The reason being, look at this post from the great Martis. He says, warning, crash alert. 2024 versus 2008, keeping it simple. No room for complacency. Musical chairs. If you look at the charts, we're seeing a lot of the same. Very, very similar price action here over and over again on both charts. And they definitely look extremely similar. He's got the head and shoulders marked out. Again, I'll move this over for you guys a little bit more so you can see it on my screen. We've got 2024 on the left here, 2008 on the right here. And the charts are damn near identical for the Dow Jones Industrial Average on the weekly chart. They are damn near identical. It's got the same troughs. I'm looking at it here from the beginning of this left shoulder. We've got a V formation and a drop downwards. That occurs here as well. A V formation, a drop to the downside. Another kind of like a descending M shape, if you will, here towards the bottom. We've got a giant letter N shape here forming the head. We've got a V on the other side of the head. Kind of an ascending W shape on the right shoulder on both sides. Another large correction here to form the right shoulder and break through this target line. Very, very similar chart. And another upward trajectory doing the same thing here on both sides. It looks almost to be an exact repeat of '08. And it just seems to be on a more condensed schedule, meaning that things are moving more quickly now than they did from the 97 through '09. We're seeing here from 2020 through 2024 going into 25. So about twice as fast and about happening in about half the time. So I think you guys can see exactly for yourself how similar these charts are and just how dangerous what we're seeing right now really is. It's not just MicroStrategies. It's not just the housing market. It's the entirety of the financial markets. Stocks, crypto, housing, bonds. And we're going to talk about this and other stocks and bonds here coming up next. But I thought that this chart was incredibly important to show you guys because everything that's happening here in basically all the way through 2009 is the same thing that we're seeing here through today, at least up here till the very peaks of 2007. We're seeing the very peaks of 2024. And the thought that this time is different just because crypto is now considered an asset, I think is really, not naive, but yeah, maybe a little naive. I hate to say it like that. I don't mean to be condescending in any way. But for now, you can't fight what's moving upwards, right? And MicroStrategies appears to have had its correction. And looking for it to start trading upwards again, along with the price of Bitcoin. At some point, we're going to have a serious issue on our hands here when this thing all starts to prove that it is not different. Look at SMCI, super microcomputer. They filed an 8K, thanks to Dario for this post too. And they disclosed that their banks, Bank of America and Cathay Bank, terminated loans for SMCI, even though they were repaid in full, even after they were being renegotiated. So why would they do this, he asks. He says, SMCI likely breached the covenants of the repayment terms again, and the banks were unwilling to renegotiate the terms any longer. And if it didn't repay in full, SMCI would have officially been in default. They did repay in full, but even still, they have not been given new loans from Cathay Bank and Bank of America. Likely, they're seeing some significant weakness in SMCI. And I do believe that to be the case here. I do strongly believe that that's the case because SMCI was using something called mark-to-market accounting. And this gave them the ability to show future orders as current revenue and profits, even though they haven't delivered on many of them. And just today, Yvonne Cheers says, I bought 2 more MSTR. It's a long-term hold for me. Congrats, my friend. I think that's a wise move, at least until it's not, right? And that just means you have to watch everything carefully. But as far as SMCI goes, we saw this company, I don't know how to pronounce this name in Chinese, of course, Zai, if you will, transferring $6 billion worth of their server orders from Supermicrocomputer to Dell. And even still, Dell today, we saw an 8% drop in their stock price after hours, after their earnings. Oh, don't worry, honey. I'll take care of it, okay? Come here. Oh, she colored on your bunny? Oh, goodness. I'll wash it off, okay? Come here. Come here. You want to sit with me?
No.
Come here. No, you don't want to? All right, then. All right, go play then. All right? Here. Take your bunny. Go play. So, Dario says, not only customers and partners are abandoning SMCI, but now its lenders are reasonably becoming very nervous, as you can read in today's 8K. Those are the same lenders that we're talking about with Cathay Bank and Bank of America no longer extending them new lines of credit and new loans, even though they did repay them, but they're breaching the covenants. And at the same time, Zai is also, again, you know, if you can read Chinese, you can see what that says. Thankfully, Dario can because he's from the area. He lives in Asia, and he can read it a lot better than I can. So I'm going to take his word for it on it, that this is what it says. But you can see here that they're transferring $6 billion worth of server orders to Dell. That is bad news for Supermicrocomputer. And as a matter of fact, don't do what I'm going to do if you don't have a high risk tolerance and you haven't done your due diligence. But I'm pretty sure I'm going to buy some put contracts on SMCI first thing in the morning. One moment. My friends, all right, let's talk about GameStop, and then we'll hit AMC. Before I do, though, I want to send I own 6211. Michael Saylor is an absolutely great salesman. Yes, absolutely. Absolutely. Here, take this over here, Sweet Pea, okay? Come over here. Right over there. He is an absolutely phenomenal salesman. GameStop has announced a release date for their third quarter fiscal 2024 results, and they will be reported after market close on Thursday, December 10th, 2024. So we will, of course, report them on this channel here as well. Thursday, December 10th, mark your calendars. Come to this channel after hours, set your notifications, click that stupid little YouTube bell, and I'll give you guys the lowdown on what the third quarter results are for GameStop. And we'll see if just maybe they come out with some crazy good plans. Because we are well aware as to what's happening with the stock. And it looks like I got things a little out of order here. Let me bring it back over here. GameStop price action moving along quite nicely. I just told you guys about the third quarter results now. It is up 33.4% in the last month, up $7.60. Saludos, Cime Nations. Saludos de Tijuana. Saludos de Dallas, Texas. And looking really good, up 27% in the last 6 months, 33% of the past month, 11 in the last 5 days. And it appears that we have maybe a partial gamma squeeze forming here. Look at the flow. Okay, if this is too small on your screen or if you're not watching your screen, let me explain what this is. The blue line at the top, purplish blue, I'll say it's blue. The large one at the top here is the $30 strike. As of this morning, there were 1.8 million in premiums on the $30 strike expiring this week. We have a net premium of $2.9 million worth of call contracts expiring this Friday on GameStop. We have $1.8 million worth at the $30 strike, $1.2 million at the $25 strike, $775K at the $20 strike, and at the $40 strike, out of the money, there's another $525,000, which is pretty high also. John Duncan says, do you think RC will dilute again on earnings day? I hope not, because as much as you guys, as much as some people like to, let's just put it this way, some people like to deep throat everything that Ryan Cohen's doing. And I'll put it quite simply in saying that GameStop did have to raise money, but timing it when he did absolutely crushed what was going on in May and June of this year. It absolutely crushed everything. I, along with other people, lost thousands, some people millions of dollars in premiums and in the value of their stock by the timing of his dilution. Does that mean that I don't think it'll happen again? No, I do think it will happen again. I do. Not his dilution, but the increase in price. I do think that the increase in price on GameStop and AMC are likely to squeeze once again. And it's looking very, very much like we're seeing a bit of a gamma squeeze here on GameStop at now over $31. Currently at $30.20 in the after hours. Closed the day out here at $30.33, which is pretty much a minimal change after hours. And people need to remember that this isn't just something that is speculation, right? There is proof and has been proof for a long period of time that there are a significant number of synthetic shares and naked shorts and market manipulation against stocks like GameStop and AMC. A lot of this occurred through a company by the name of FTX, also with their subsidiary partner, Alameda Research. Both of them owed a significant billions and billions of dollars to the Commodities Futures Trading Commission and to other, the Department of the Treasury, the IRS, and many other companies as well. And Samuel Clemens here at Herb_83 posts, just remembering all those billions of dollars that were owed in futures to the CFTC from the FTX scandal. How many IOU shares were synthetically kicking the can down the road? What he's alluding to here are the tokenized securities that were used as synthetic shares to artificially short GameStop and AMC. He also pulled up a list of the DAAG certificate and tracker for perpetual futures of tokenized stocks and what that means and how they're being used. And this is an exceptional explanation. I've read through this myself. We've talked about this on this channel, and I will briefly go over it because there's much more here than meets the eye. This isn't just about this isn't just about the short interest that you can see on the stocks, because even short interest of exchange traded funds is not reflected of the underlying assets. So ETFs and ETPs that hold GameStop and AMC, when those ETFs are shorted, it does not increase the visible short interest of stocks like AMC and GameStop, but they are still, of course, being shorted through the ETFs and ETPs. This is a way for them to hide the short interest so that companies like Melvin Capital are not showing 140% short interest. Continuous borrowing. Market makers can borrow shares on a perpetual basis. This means they do not have to find or locate the underlying assets each time they want to facilitate a trade. This enhances liquidity as market makers can provide buy and sell quotes more efficiently. Also, it means synthetic shares are being created. They're borrowing without a share to borrow. Liquidity provision. By allowing market makers to borrow shares freely, perpetual tokenized stocks help maintain a robust liquidity environment, aka artificial liquidity. This is crucial for trading platforms, especially in volatile markets where rapid buying and selling occur. Market depth. Continuous borrowing contributes to deeper markets, enabling larger trades to be executed with minimal price impact. This is essential for maintaining stable prices and attracting more participants to the market if you are a market maker who is trying to set the prices of securities like Ken Griffin and Doug Sifu of Citadel and Virtue. This allows for reduced friction. The ability to borrow without locating shares reduces transaction friction, making it easier for traders to engage in the market without delays or complications associated with finding available shares. Meaning they don't need to find shares. They just use these tokenized securities in order to sell the stock short and deliver you shares, IOU shares, into your stock in the form of ones and zeros in your accounts that they don't actually have. Then later on, they try to get them on the market in the dark pools, and if they can't, they simply fail to deliver. Thus, the creation of synthetic shares. Market makers often employ various strategies, including hedging and utilizing options to manage risks associated with borrowing and trading these perpetual stocks. This can include agreements that allow them to buy back borrowed shares at predetermined prices. This is also the same thing as using married and divorced calls and puts in order to prevent themselves from having to actually buy shares of stock. They will just marry one person's call with another person's put, for example, in order to prevent themselves from needing to buy more stock. So all of this directly leads to the dilution, artificial dilution of your shares on the New York Stock Exchange and your shares in the markets. And building another exchange in Texas is not going to fix this. Buying and holding more shares of stock is not going to fix this. It could lead to something in the future, but it's not going to fix the problem at hand. For that, we've created Lit Exchange. See the link over there. Lit Exchange is an upcoming stock and crypto brokerage that we've been working on for the last 38 months. So far, we have raised over $500,000, $500,000, through our Regulation CF crowdfunding campaign, through a FINRA-approved funding portal, and also Silicon Prairie. Silicon Prairie is also an SEC-registered broker-dealer for the purposes of acting as a funding portal in order to allow companies like Lit Exchange to give retail investors like you the opportunity to own private equity. So this is the first time in history, the first time in the history of the world, that any upcoming stock and crypto brokerage has offered you, a non-accredited investor, retail investors, the chance to actually own the company pre-launch and pre-IPO. Keep in mind what that might mean. No other stock and crypto brokerage in the history of the world has ever given you the opportunity to own the company before they launched or before they're IPO'd. Because they don't want retail investors to make that money. They don't want retail investors to have that power. They consider private equity to be something for the rich and only for the rich and smart money. And they think that you're dumb money. But in reality, is if you've got money that you're willing to put invested in private equity for the next couple years, the next 2 to 3 years, for example, let's say that, then you have a potential opportunity to make significant potential profits in the future when we IPO Lit Exchange. For now, you will hold units of the company, which is basically equity ownership. And then when we're going to IPO, you will then receive them in your brokerage account before the IPO at the IPO price. And of course, you would have received them at today's price, which is basically our pre-seed round. And during our pre-seed round with a valuation of $497 million, over 260 retail investors have already invested $500,000 in Lit Exchange. We have done this with absolutely zero advertising, $0 ad spent, and very, very minimal exposure here simply on YouTube and Twitter. So I hope you guys look forward to seeing what happens when we actually start spending money on commercials, YouTube ads, Google ads, television, and many other things that are going to actually put people's eyes to Lit Exchange and really launch the company to a greater level. So again, we've done all this organically for the purposes of sending orders to lit markets and avoiding the payment for order flow manipulation that happens via dark pools and wholesalers and synthetic shares that occurs every time you use a company like Robinhood and Webull and Charles Schwab, because they sell your orders using payment for order flow to the wholesalers who internalize the trade, who process them in dark pools, and most of the time, oftentimes, fail to deliver, and very often front run your trades. Anyways, if you understand what I'm talking about, you have the opportunity to actually make a significant potential profit on Lit Exchange that no other retail investor has had. One of these days, you'll see us on TV, you'll see us on sporting events, you're going to see us all over the place, and there's a quite a good possibility that you're going to say, shit, I should have done something about it back then when I actually had the opportunity, because this is a short-term opportunity, let's put it that way. Options traders are targeting higher U.S. Treasury yields. There is a massively bearish tone that is happening right now in the market for interest rate options, and this suggests that bond traders are bracing for Treasury yields to surge in the coming weeks. Surging yields is bad for bondholders because yields go up, their returns go down. Do you understand? Yields go down, their returns go up. There's been steady demand for bearish hedges using Treasury option put structures in January contracts on 10-year notes expiring in December 27th. And this positioning has been building the past few days in February options even, which expire January 24th, the week of Donald Trump's inauguration. Coincidence? The open interest or the amount of outstanding positions by traders has been increasing, specifically between this $107 and $109 strike price in January and February options. These levels basically mean that people, or firms, I should say, funds, big money, expects bond yields to increase, which is, of course, bearish, taking a bearish position on bonds, and targeting a yield as high as 4.9% for a premium of $2.5 million. Some of them are going even higher than this, going all the way up to 4.9% for these bond yields. And they made a bet of $2.5 million on that. And the yield hasn't been that high in more than a year. So they see something that the majority of people don't. So these are a reminder, these wagers by smart money are a reminder that even though yields have come down after the election, investors are very well aware of the potential for the so-called Trump trade to gain traction again. And the premise of that trade for months has been that Donald Trump's policies, including steeper tariffs and all of the ridiculous spending that's occurred from the Biden-Harris administration through now, is likely to increase inflation, which is going to push yield higher. So treasuries fell a little bit today, bumping up the 10-year yield slightly, as you can see here on that line, just starting to trend upwards after Trump threatened to place additional tariffs on U.S. trade partners, Canada and Mexico, if they continue to allow illegal immigrants over our borders. And we already saw Justin Trudeau turn around and tuck tail and call Donald Trump immediately and say, okay, that's not a good idea. We're not going to let Mexican, illegal immigrants in. Blame Mexico is what I was trying to say. And of course, the Mexican president already also called Trump and had a discussion there saying that we're not going to allow illegal migrants to the U.S. border anymore. So Donald Trump has not even entered office, and there's already massive amounts of changing happening in geopolitical and macroeconomic sectors thanks to Donald Trump and his moves, because people do think that tariffs, and they will likely be inflationary in the beginning, but what's really going to be more inflationary is all the trillions of dollars that have been spent, $1 trillion every 3 months by Janet Yellen, by the Biden administration, by the Harris administration, by Jerome Powell. All of that has created a form of inflation that will go forward in history here in the coming months and even the coming years that we are going to have to tackle. And Donald Trump plans to tackle that with the Department of Government Efficiency. At first, the Department of Government Efficiency is going to make it appear as if we are in a recession, but we're already in a recession. The only thing that's going to change is that the GDP of this country is going to be reduced because there will be less government spending on unnecessary government workers, on an unnecessary 87,000 IRS agents, and so on and so on and so on. So that will make it appear as if we are being led into a recession by Donald Trump. But the reality is we're already in one, but it's being hidden from people by the increased amount of government spending. And that increased amount of government spending is leading to further inflation. So those people that don't realize this are likely to be, no offense, Biden and Harris voters. Why? Because it's easy to point the finger. It's easy to point the finger when it's happening for these people, but they're unable to look back and understand why these things occurred. Donald Trump is not going to increase spending by the government. Donald Trump is going to be cutting spending. That's going to reduce the GDP of this country. That's going to reduce number of available jobs because we don't need these people in government. But by doing so, by reducing the GDP of the United States, by reducing government spending, it is going to reduce inflation. But before inflation is reduced, it's going to continue to trend higher. It is going to continue to trend higher. There is no doubt about it in my mind. And that's another reason why I'm bullish on yields, treasury yields going higher, which of course is bearish for the bond market. And now the more that I think about it, the more that I talk about it, the more that I realize that I probably need to make an investment to hedge that position. So in a cash market, bearish positioning has been, as you can see here, bearish positioning has been growing according to a survey of JP Morgan Chase clients who are now the most short that they've been in a month. In a month. So their client short positions increased by 2 percentage points, which is the highest that we've seen since October 28th. And long positions also rising by 2 percentage points. So they're kind of taking both sides of the trade. But the premium to hedge moves in the bond market has drifted closer to favoring puts. Over the recent sessions that we've seen demand for options targeting higher yields over the coming weeks, and the decrease in the potential for a Fed rate cut. Last month, the stock market was pricing in an 83% chance of a rate cut in December. Now, the Fed rate cut chances for December are now being priced in at about 52% by the stock market. If you ask me, when the CPI numbers come out, I believe it's the first Wednesday of every month, if I recall. But when CPI numbers come out for December, that percentage of 52% priced in for a rate cut in December is probably going to drop somewhere to around 28%, 25% or so. Chances of rate cuts in December. And if the Fed does cut rates, which I doubt, it'll only be a quarter of a percentage point, if not a zero, no rate cut at all. Keep It Real says, so Butcher, basically what you're saying is no matter what Trump does that's bad is somehow good. No, absolutely not. Tariffs are not bad. Tariffs are good for our country. They're bad for the companies that have offshored what's happening and taken jobs away from the United States. They've sent these jobs to China and other countries over there. It is going to be inflationary in the short term because those jobs will have to come back to the United States. Those companies will have to come back to the United States, and that will increase prices. But guess what that does? That increases the number of American jobs. And guess what that does? It spurs the economy. It gets more people employed in the private sector and decreases spending by the government. Do you understand? It's a very complicated concept, I understand. Charles Payne is now talking about AMC and GameStop, saying that animal spirits prevailing. Now Wall Street bears are jumping on the bandwagon. Of course, dumb money was already on board. We've seen that here with AMC and GameStop for the last 3.5 years, going on 4. And AMC is now up 11.5% in the past 5 days. Up, let's see, today is currently down, 6 cents change today with an increase of 4 cents in the after hours. So almost no change today, but still up 11.5 plus 0.83, no, 11.58% in the last 5 days. It has touched 499. You can't see it on this chart, but it touched 499 multiple times today on two separate occasions. You can't see it on this chart either. You can see the high today was $5.01. It touched 499 on multiple occasions, and the battle for 501 has begun again with AMC stock. So I firmly believe that it is being artificially manipulated through many of the ways that I've seen you guys already. Have been aware of for a significant period of time. When AMC hits $5.66 a share in the near future, shorts will be terrified because that will automatically wipe out over $400 million of debt in the form of convertible notes that AMC issued to debtors. Debtors were willing to take shares of stock knowing that AMC is incredibly undervalued. Companies like Bank of America increased their ownership of AMC stock by over 400% in the last 6 months. Companies like Vanguard and BlackRock have increased their ownership of AMC stock significantly. I forgot the exact amount, but you can look it up yourself if you want on Fintel, AMC Fintel, have increased. You know what? Actually, I can do it for you. Why not? Because we do our homework on this channel, right? Let's take a look here. Filing dates, new filings. Okay. Vanguard Small Cap Index Fund investor shares. Today, just today, look at that. That's why I like to look at this end port filing. They increased their number of shares by 21.86%. That fund for Vanguard now has over 9 million AMC shares, and increasing it over 21%. Well, that means they bought over 1.5 million, over 2 million shares of AMC stock. And their value, of course, is increased by 11.3%, which is pretty good to hear. So these are the newest filings we've seen here. And this is a percentage. So this Vanguard ETF, Small Cap Index Fund, increased their percentage of AMC stock by 21.86%. They now hold over 9 million shares, not one fund alone. The TLSTX Stock Index Fund increased their shares by 3,600 for a total of 4,333. Small fund, but still nice to see. Another small fund here, TIAA separate account, Teachers Personal Annuity Index and Deferred Variable Annuity Fund increased the number of their shares held by over 50% as well. Vanguard Institutional Total Stock Market Index Fund institutional shares increased their holdings by 11.55%. That end port filing was filed today. And a lot of filings today. BlackRock, none of them really seem to have gone down. Here we go. Nope, that one didn't go down either. T. Rowe Price's Extended Equity Market Index Fund of AMC lost 9% of value, but they still remain holders of 15,500 shares. You know, I purchased more shares of AMC stock than that in one go, but that's still a significant number, significant dollar amount of AMC. And as a matter of fact, I did it live. You guys saw me do it on this channel. Vanguard Total Stock Market Index Fund investor shares, 11.57 million shares, 11.5 million shares. They increased. They reported today in the end port filing that they increased their AMC holdings by 22.77%. That is fucking huge. Huge. So they bought like 3 million shares in the last week alone. So if people are wondering why the price of AMC and GameStop are going up, it's because these big investors like Vanguard and BlackRock and all these guys are going long AMC and GameStop. Let's see, Vanguard Extended Market Index Fund, they sold 3.5% of their shares. They still hold 5.4 million, but it looks like that was moved over here to one of these other funds that increased by 22%. Let's see, Master Investment Portfolio, their end port filing shows that they bought 50% more, approximately about 48% more AMC stock, increasing their shares. sorry, I'm a liar. They increased their share percentage by 14,928%. They now hold 32,000 shares, and so on. Even the State Street Small and Mid Cap Equity Index portfolio increased their holdings of AMC by 42.8%, now holding 130,000 shares. The Spider portfolio, MSCI Global Stock Market ETF, increased their number of shares by 125%. Toroso Investments LLC decreased by 10.7%. They hold 24.6 thousand shares. Variable Insurance Products Fund, they increased by 49%. That was yesterday. State Street Total Return. State Street's going long again, increasing their AMC shares here by 983% for 10,000 shares more. Another Variable Insurance Products increased 49% for 7,200 shares. Bridge Builder Small Cap Mid Cap Fund increased it by 2,000 shares, 2,000%, having 154,000 shares now. DWS Investment Funds, Deutsche, their small cap index now has 54,000 shares of AMC, and so on. Even Goldman Sachs holding 25,000 more here. And the largest holders being Vanguard Group, who now has 35.296 million shares of AMC stock, increasing their percentage ownership on the 13th of November by 15.67%. BlackRock is the second largest institutional investor, holding 25.9 million shares. They increased their percentage ownership by almost 25%. Susquehanna, 16.15% increase in the middle of November, November 14th, now holding 14.5 million shares. Vanguard increased their shares ownership percentage of AMC by 22.7%, holding 11.57 million shares. Morgan Stanley increased their ownership by 24%. They hold 10.3 million shares, and so on. Even the IWM Russell 2000 ETF is holding 8.8 million shares. So now, and we know, due to the first quarter announcement by Adam Aron and the CEO the board of directors of AMC, that retail investors, including exchange-traded funds like IWM, retail investors hold 90% of all AMC shares. 90% of the entire float is owned by the retail investor, like you and I. Right? Like I told you guys on this channel, you guys watched me buy, I don't know how much. It was 6 figures worth of AMC and Ape stock here on this channel, and I've added to that position significantly in the form of shares and call contracts. So I remain extremely bullish on AMC. I'm also holding GameStop still, and I'm looking at a potential breakout of both stocks here. I have not received confirmation of that yet, but with the flow that we're seeing into call contracts for AMC and GameStop, it is very much looking like there is about to be a potential gamma squeeze if GameStop remains over $30 by Friday, because there is $1.8 million worth of premiums saying that call contracts expiring this Friday are going to remain over $30. An additional $1.18 million at the $25 strike, $386,000 at the $28 strike, $370,000 more at the $28.50 strike. Now, the reason I talk about both stocks at the same time is because the stocks are linked at the hip through exchange-traded funds and exchange-traded products and baskets of securities and tokenized security products. Let me show you this in case you're unaware. This is AMC stock. If you've never seen this before, it's because I just posted it day before yesterday. That on the bottom is the OBV. It's the on-balance volume. I'm going to read this to you so you don't have to watch the screen. So this is what this says. Look, if you want to look, you can just see that fucking huge increase in the OBV here. Not only are institutions buying more, but retail are apparently buying more too. The OBV is at all-time highs at 1.4 billion. The on-balance volume measures buying and selling pressure by tracking volume trends relative to price movements. If AMC's OBV has reached all-time highs, it means that trading volume is showing consistent accumulation, folks, even if the stock price hasn't moved significantly upward yet. Here's what this means in layman's terms. One, there is increased retail and institutional interest, as I just proved to you on the Fintel filings, showing for the month of November, BlackRock, Vanguard, Susquehanna, State Street increasing their percentage share ownership of AMC between 15 to 25% each. AMC is heavily followed by retail investors, particularly those in meme stock communities. High on-balance volume could indicate that more investors are accumulating shares in anticipation of a future price move, regardless of current market conditions, regardless of the current stock price, regardless of the lies and short and distort tactics told on mainstream medias, like Charlie Gasparini and CNBC and Jim Cramer. Short squeeze speculation. AMC stock often sees heightened OBV during periods of short interest. If OBV is at an all-time high, it could mean significant buying pressure is counteracting short sellers, creating the potential for a short squeeze. There are significant positive business developments. Recent upgrades to AMC theaters, expansions, or movie distribution deals might be drawing investor optimism, including that of institutions. If investors are bullish on AMC's recovery prospects and fundamentals, it may lead to sustained buying activity. I think you can understand what that might mean. But there's an accumulation without a price spike. High on-balance volume without a matching price increase often signals that there is stealth accumulation. Large investors might be buying shares gradually to avoid spiking the price, leading to OBV climbing ahead of a potential breakout. And again, I think I just proved to you, showing you all the end port filings for November 13th, November 14th, today, and today, November 26th, that is exactly what's fucking happening. High OBV without a matching price often signals a stealth accumulation. Options activity influence. AMC has seen heavy options trading in the past. If call options are exercised or hedged by the market maker, this could translate into increased share purchases by market makers, further boosting the OBV. In summary, AMC's OBV hitting new highs suggests strong accumulation. However, investors should watch for confirmation through price movements, as OBV alone doesn't guarantee a price surge. It's often a precursor to momentum. And I think it's pretty clear that people are seeing that that's what's happening here with AMC and GameStop over the last day, 5 days, month, several months, etc. The TLDR, we're going to be so fucking rich. Word. Cheers, my friends. That's it for today. I wish you peace and wealth. If you guys got any questions, drop them in the chat. Keep It Real says, I agree with you on those points, but I think as apes, we need to hold the government accountable, not fanboy them. That's exactly right. That's why I'm so happy that Donald Trump was elected president of this government by the majority of the United States. Because people are holding the Biden-Harris administration accountable and realizing that what is currently happening with the sending money to other countries and spending ridiculous amounts of trillions of dollars and hiring unnecessary agents for the IRS and other government entities is not sustainable. So people are holding them accountable, and they've done so. They've done exactly that by kicking the Democrat administration to the curb. Cheers, Paul, Bitcoin, Stu, everybody. I really appreciate you guys. You know what? Here, let me do something. I want to go to my channel real quick. I want to go over here. As a matter of fact, I was already in YouTube Studio. But I want to give a quick shout out to Jaina, Yvonne, Typo Negative, and everyone else who is a supporter of the channel, long-term supporters and members. I truly appreciate you guys. I cannot state enough how much I appreciate you guys and look forward to talking to you and hearing what you guys have to say and hearing your inputs every single day, because it really does mean a lot to me. But I want to go into YouTube Creator Studio and see something real quick. Thank you, Typo. Quant Trade says, would you like a news event bot in your Discord? I'm currently developing one and will input it for free. Yeah, my friend, why not? That's very similar to what we're doing with Lit Exchange. It's one of many options that is going to be available in Lit Exchange. So I'd like to see what you come up with for the Discord, and maybe we can even work together and have you work with my team at Lit Exchange on helping to implement that sort of bot within Lit, because that is something we've been working on for an extended period of time now. But a quick shout out here. Let's see where the hell this is. There we go. Let's see. I appreciate all of you who are subscribed so far. 62% of people are subscribed to the channel, but 37% of people who have watched in the last week are not subscribed. So if you gain value from this channel, if you've learned something, please consider subscribing. It does nothing for my ego, but it does help share this information with more people, because creators with more subscribers get shared more on YouTube and on Twitter and so forth. So I appreciate you guys for that, very much so. Giles says, as you said, boss, they can't fucking close their positions. My friend, that's exactly what it looks like. It looks like they can't fucking close their positions. If they could, they would have already done so. They would have locked in their money. They would have been well on their way. They would have been telling retail investors to buy AMC and buy GameStop so they could short the piss out of it and make ass loads of money when they closed. But the problem is, we own 90% of the shares that we know of. I wonder how many synthetic shares were sold that we don't even know about, that we also own, that also need to be removed from the system, because they can't just stay out there floating around forever. That's not a possibility. It's just not a possibility. So it has to happen. Paul Andrew, Bohemier, you guys are right. WGBSFR. Yeah, so I'm thinking I am probably going to take out a long position in the next few days here on MSTR. I'm probably going to take out a short position on SMCI. And I'm going to watch the way that the Dow Jones and the S&P and the NASDAQ trade and decide which way I'm going to go in the short term for those. But looking at these charts, for the midterm, it does not look good for the stock market and the crypto markets. KL Bohemier, sorry if it's KI or KL, can they buy and sell indefinitely in the dark pools? Yes, that's the problem. That's why we need Lit Exchange so bad. That's why I keep telling people why we've been working on it for over 3 years now. Because they're not going to stop fucking trading orders in the dark pools. They're not going to stop manipulating your orders in the dark pools. They're not going to stop internalizing their trades. They're going to use them to their advantage forever. The only way to stop it is to get retail investors to use a brokerage like the upcoming Lit Exchange that does not route all of these orders to the highest bidder at Citadel or Virtue just to maximize their profits. The point here is to maximize transparency and to give retail investors a fair shot, a fair shake in the markets that we haven't had for decades. And the only way that that's going to change is if we do it ourselves. And the only way we're going to do it ourselves is through Lit Exchange. Because we all know Gary Gensler is not going to make payment for order flow illegal. We all know he's not going to stop them from using dark pools. He's not going to stop the market manipulation that's been going on for decades. So if you want your orders routed directly to lit markets, to keep them out of the dark pools, to keep them away from the hedge funds and the high-frequency traders, to be able to use artificial and swarm intelligence to your advantage, to have a bleeding-edge user interface, and you can join our Founders Program and sign up for our wait list. You can see our SEC Edgar filings here on the SEC Edgar website. You can invest in LIT through the FINRA-approved funding portal and registered broker-dealer, Silicon Prairie. 4, the Founders Program to own equity in LIT Exchange and receive a lot of these benefits that will never be available again. And all you got to do here, if you want to join the wait list, pop your email there. We will send you guys updates. You can see the SEC filings here on the SEC Edgar website for LIT Exchange. You can see our Reg D, DAC, and shortly to come our CA filing, which is coming in the next couple of days, most likely. You guys will see a new CA filing, which is basically an amended Form C on our SEC Edgar website later this week. You can see the Silicon Prairie funding portal page here so far. 266 founding investors have invested $503,000, over $500,000. You can see everything there from the pitch deck, the business plan, the auditor's reports, private placement memorandums, the subscription agreements, the disclosures, and even check out a cool video and many other things that we put up there regarding the benefits, the risks, and everything else involved with the company. So I want to say again, thank you everybody for joining us. Have a great evening. I'll see you guys tomorrow. I'll be on earlier in the day tomorrow. I'm guessing early afternoon, probably sometime around 2 to 3 p.m. Eastern. But you know, the only way to know for sure what time we're going to go live is to subscribe and turn on that stupid little bell on YouTube for notifications that I know a lot of people don't get because I don't know if it's a shadow ban by YouTube or what it is. But I would like to say thank you guys all for 15 million views. So far, I just got confirmation from YouTube that we have now reached over 15.5 million views on YouTube alone. That is, I mean, the number on Twitter is in the hundreds of millions. But the fact that we've reached over 15.6 million views on YouTube is huge. We've reached over 1.3 million watch hours here on this channel and are on the cusp of 44,000 subscribers. So if you haven't subbed, go ahead and subscribe. Let's get to that number. Let's get as much good information to people out as possible. And again, thank you, everybody. I truly appreciate you guys for being supporters of the channel, supporters of myself, supporters of LIT Exchange. And as I've said for the last 3.5 going on 4 years now, the entire reason that we're doing this is because retail deserves fairness, transparency, and the opportunities in finance that the smart money has, that they've been robbing us from of having for too many decades now. Cheers, everybody. Enjoy the rest of your evening. Thanks again, ladies and gentlemen. Thanks again. Good night.